Namaskar to all. I, Pratibha Chaudhary, IRS, Additional Director of Income Tax, Publicity, Directorate of Public Relation, Publication and Publicity, Central Board of Direct Taxes, New Delhi. I extend a warm welcome to all of you to another informative and special episode of Samvaad. Friends, today we have come up with a very important informative series on the topics of exemptions under the Income Tax Act. In this special series, we will be covering 8 crucial topics related to exemption provisions and their practical implications. We are honored to have with us today a distinguished guest, Shri B. Bala Krishna, IRS. We heartily welcome you, sir.
Thank you.
Sir is an IRS officer of 2002 batch and is currently serving as the Commissioner of Income Tax Exemptions, Hyderabad. Sir has rich and diverse experience of income tax and worked over 23 years in the department. In his present role as CIT Exemptions in Hyderabad, he has led numerous outreach programs for stakeholders and organized extensive capacity building exercises for JAWs and FAWs, especially in the light of the rollout of new provisions. Sir has also held key positions across various verticals and worked in investigation division, admin, nodal officer to the Honorable Election Commission of India and received with his team Best Election Practices Award 2018. Sir, we welcome you and thank you very much, sir, for giving us time.
Thank you, Pratibha. And I also thank the Directorate Publicity for giving me this opportunity.
Sir, kindly explain to our viewers what is the Unified Eligibility Framework for Charitable Institutions under Section 332(1) of the Income Tax Act 2025.
Well, it is very important to know about the exemption provisions for the Income Tax Act 2025. Under the Income Tax Act 1961, the eligibility for the registration of the charitable or the non-profit organization is scattered across multiple provisions. Section 12A, 12AB covered trusts, societies, Section 8 companies, while Section 1023C. All these often lead to the duplication, parallel procedures and interpretational conflicts. In the Income Tax Act 2025, the exemption provisions are appearing from the section 332 to 355 and the schedules 2, 3 and 7. The sections are mentioned about various provisions and the conditions laid down for the claim of the exemption, whereas the above 3 schedules mentions about the institutions which can also claim the exemption under the new provisions subject to fulfillment of certain conditions. Further, Section 332(1) of the Income Tax Act 2025 brings all the eligible entities under a single consolidated framework, explicitly including public trusts, societies, Section 8 companies, universities, government funded institutions and other notified bodies. The impact is that every eligible charitable or non-profit organization, regardless of its legal structure, will now follow a common registration and compliance pathway, ensuring the uniformity, reducing the litigation and making the process more transparent.
Sir, how does the eligibility criteria for registration of trust institutions under the Income Tax Act 2025 compare to the 1961 of the Income Tax Act?
Under the Income Tax Act 1961, the eligibility for the registration of a trust or an institution was linked to the definition, that is charitable purposes, under the section 215, and trust deed had to ensure that the objectives were for the public benefit. And as per the new Act, Income Tax Act 2025, Section 223 defines charitable purposes, which will have all the limbs corresponding to the Section 215 of the Income Tax Act 1961. Further, Section 332(2) of the Income Tax Act 2025 makes the requirement more explicit by mandating that the entity must be an irrevocable trust and its objects should be wholly or partly for the charitable or religious purposes. This change brings uniform clarity to the registration process and ensures stricter scrutiny of the trust deeds. As a result, private or revocable trusts are automatically excluded, thereby reinforcing the focus on genuine charitable and religious institutions serving for the public interest.
Sir, how does the Income Tax Act 2025 shift from an exemption based regime to a taxable regime under Section 334 to 336? Kindly explain to our viewers, sir.
The Income Tax Act 2025 brought in concept of registered non-profitable organization, that is RNPOs, and brings about a fundamental change in the taxation framework, shifting the concept from first exemption then taxable regime under Section 1961 Act to the first taxable then claim the exemption as per the eligibility. As per the Section 334, the law is now specifically provides that the income tax payable by a registered non-profit organization on its total income for any tax year shall be calculated at the prescribed rates, namely the normal rates applicable on taxability of the regular income and on the residual income, and also at the rate of 30% on the specified income. This expression itself marks a departure from the prior approach where the income of the trust or institutions was exempted subjected to the satisfaction of the condition, then taxing the same in the case of certain deviations or violations. Section 335 introduced a comprehensive definition of the regular income covering income derived from the charitable or religious activity for which RNPO is registered, income from the property or the deposits or the investment held wholly or charitable or religious purposes, income from the partly held property or investment as per the Section 332(b), voluntary contributions and gains if permissible. Commercial activity as per Section 344 to 346. By codifying the sources as regular income, the statute now treats them as part of the tax computation base rather than automatically exempt. Further, the Section 336 defines the taxability of the regular income and prescribes that it shall be nil if 85% or more of the regular income of the year has been applied or accumulated for the charitable or religious purposes in accordance with the Section 341 and 342. In other cases, taxable regular income is computed at 85% of the regular income reduced by such application or accumulation. Thus, the application of the income is now recognized as a deduction mechanism rather than a condition for the exemption. The most notable shift is the creation of category of specified income taxable at the rate of 30% under the Section 334(1)(a). This ensures there are 13 streams of the income even if received by the registered non-profitable organization are compulsorily to be taxed without the shelter of the exemption. Few examples of the specified incomes are anonymous donation subjected to certain conditions, related party transactions, expenditures outside India, any income applied to the purposes other than the charitable purposes for which the registration is made, any portion of the accumulated income spent for other than the charitable, etc.
Sir, what are provisions for the donations made to the places of worship as per the Income Tax Act 2025?
Amount received by a RNPO whose property includes a temple, mosque, gurudwara, church, or any place of worship, donation for the purposes of the renovation or repair of such place of the worship, then as per the Income Tax Act 2025, Section 340 specifically deals with the donations received by the registered non-profit organization for the purpose of the renovation of the places of the worship. Such donations, at the option of the organization, may be treated as a corpus donation under Section 339, provided four conditions are met. They are: the corpus is maintained separately, the application is strictly for the purposes for which the donation is given, the funds are invested or deposited in the specified modes as per the Section 350, and the corpus is not diverted as a donation or to any other person.
Sir, can you explain the provisions of the accumulation of income by RNPOs under Section 342 of the Income Tax Act 2025?
Income Tax Act 2025 consolidates these scattered provisions into single comprehensive section. The Section 342, subsection 1, continues the principle of allowing the trust to accumulate the income for up to 5 years, provided a prescribed statement is filed before the due date under the Section 263(1), clearly stating the purpose and the period of the accumulation. Subsection 2 removes all the ambiguity by explicitly stating that any payment or credit out of the accumulated income to any other registered NPO shall not be treated as an application, thereby codifying the tightening the restrictions which was only partially introduced by the 2021 amendment in the 1961 Act. Subsection 3 provides that where a trust is unable to apply income due to an injunction or the order of the court, such period shall be excluded from the 5 years limit. This codifies what was earlier only a matter of judicial interpretation of the Section 11(2) in the 1961 Act. Subsection 4 reiterates the investment conditions requiring the accumulation income to be invested in the modes specified in the Section 350 of the 2025 Act, and this is the equivalent to the Section 11(5) Act under the 1961. A significant relaxation is introduced under Section 342(5) and 6 of the 2025 Act, which allows the NPOs to apply to the assessing officer for change of the purpose of the accumulation, and if satisfied, the AO may permit the trust to use such income for other charitable or religious purposes consistent with the objectives. Further, Section 342(7) addresses the issue of accumulation of the income at the time of the dissolution of the RNPO by empowering the assessing officer to permit such accumulated funds to be transferred to the another registered RNPO.
Sir, what does Section 343 say about deemed accumulated income from RNPOs?
Section 343 of the Income Tax Act 2025 deals with the deemed accumulation income. Subsection 1 provides that regular income of a registered non-profit organization, after reducing the income already applied in accordance with the Section 341 and the income accumulated or set apart as per the Section 342, can further be reduced up to 15% of such regular income, which shall be treated as deemed accumulated income. This portion is allowed to be carried forward without any specific conditions, provided it is invested or deposited in the mode specified under Section 350, that is the approved modes of the investment. Subsection 2 further clarifies that such deemed accumulation income will not be treated as accumulated under the Section 342, which requires specific conditions like filing the form, purpose, the time frame, etc.
Sir, what are the restrictions on commercial activities by RNPOs under Section 345 and 346 of the Income Tax Act 2025?
Section 345 of the Income Tax Act 2025 lays down that a registered non-profit organization other than those which are covered under Section 346 shall not carry out any commercial activity unless such activity is incidental to the attainment to the objectives and separate books of accounts are maintained for such activity. The 2025 Act has consolidated and modernized this concept, replacing the phrase business undertaking used in the 1961 with a broader expression commercial activity, thereby enlarging the scope to cover a wider range of the revenue generating activities.
Sir, what are the new provisions regarding commercial activities by RNPOs carrying out their general public utility objectives under Section 346 of the IT Act 2025?
Section 347 of 2025 Act provides that a registered non-profit organization engaged in the advancement of any other objects of the general public utility shall not carry out any commercial activity unless three conditions are satisfied. The first one is the activity is undertaken in the course of actual carrying the GPU objectives. Second is the aggregate receipts from such activity do not exceed 20% of the total receipts of the registered NPO in the tax year. And the last is separate books of accounts are maintained for such activities.
Sir, we are truly grateful for your time and enlightening us on such an important topic. Your insights on the different provisions of exemptions have been immensely valuable. I am truly grateful to our esteemed viewers for their time and patience. Please reach out to our website incometax.gov.in for more information and educational content. Do follow us on our social media handles like X, Instagram, Facebook, YouTube, and LinkedIn. Please keep watching Samvaad. Stay connected to us. Namaskar. Jai Hind.
Thank you. Namaskar.